What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Tesla with the ticker symbol TSLA. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. Here we have the daily chart for Tesla, and today was almost a 6% drop. On the technical aspect, you can see that it's right near support. There's some support right around the 220 level, and we are right at it. And there's some resistance right around the 280 level, 283, 280, give or take, obviously a couple dollars. So what's going on in the chart? Well, price is still bearish. It's still in this downtrend. Price is making lower lows, lower highs. We bounced off of prior support, cannot continue higher, came back to support. So it's not looking good in terms of the technicals. Means that we could see a break of this support to maybe come back down towards the 170, 180 level. If we double the range, make a measure move down, that takes price right around to the 160 level, 162. So again, it's not guaranteed to get there, but if we do break down lower, that would be a bearish target in play, 162, 163. Especially with that earnings report coming out tomorrow, that's going to be a wild card. Looks to be coming out after market close, and with price right at support, we could see a pump up higher, but at the same time, we could see a drop down lower to stop out all the longs who thought we did see already a bottom in the market. So again, it's going to be a wild card. Let's see what happens. But as right now, the technicals don't look good. We're below the EMA, below the trend line. We're back at support, but with room to the downside. It looks to me that we could probably see a breakdown lower. That's what the technicals are saying. It's favoring the downside. Looking at the weekly, the macro, this will make a lot more sense. So you can let's say we don't see the right side of the chart. Let's say we only have these three swings right here. So we have one swing right here to this swing, and then you take the same line up and make a parallel line. You take it to this prior high, and then you can see that's where price topped out at. Boom, price hit the top side of the channel. So price goes from back and forth in a channel from the top to the bottom, from the bottom to the top. So we hit the top. Where do you think price is going? Let's say, we play this out. We simulate the price action. Let's say we just hit the top. So I want you guys focus right over here. So we hit the top of the channel. This is the same exact line copied to the top. So it's the same line. So it looks like a nice channel. So we hit the top, and then look what happened. Price is going to the bottom. It's going to the bottom, slowly going to the bottom, slowly going to the bottom, slowly going to the bottom, and it's almost there. So it's almost to the bottom side of the channel, which is right around, like I said before, the 170, 160 level. Can it stop prematurely? Yes, it can. Sometimes that does happen. You monitor the price action. If it looks really bullish, then you can forget about it reaching the bottom. But as right now, it doesn't look like that. So there's a good chance we could see price move down lower to hit the target that it has in mind. It has a goal. The price has a goal. The bulls have a goal. The bears have a goal. And the bears' goal is to reach the bottom side of the channel to complete the technical market structure pattern. Because they want to continue to aggressively sell until there's a change in state. Meaning, like, if they can get it over here, they might say, okay, well, we're at technically it's support, so where bulls can probably jack up the price again, because if the bulls play the channel, it could come back up to the top. So that's why the bears might just get it over here instead of maybe back down to the $30 level. So I'm not looking at anything below 160, 170 as of right now until we see what happens over here. But as of right now, it looks like we still have room to the downside. So let's see what happens. But it's not guaranteed to get there. I want you guys to remember that. I mean, there's nothing you could do in the market that can guarantee you something's going to happen. So, just forget about it. But this is probably the next best thing. Looking at the past, looking at the market structure, we hit the high, we go down to the lows. We hit the lows, we go down to the highs. We go up to the highs, we hit the highs, we go down to the lows, we hit the lows, we go up to the highs. So it's most likely going to play out. And it's not just something that's unique to Tesla's chart. You can use the same drawings on any stock, anything with the price chart. Basically, the same patterns repeat because humans are predictable. It's the same emotions. It's the same things. You could say you do random things, but typically, you have a routine in your day. You're not always doing random things. Yes, you might see something change. Like that's why I say that we might not hit the bottom side of the channel. Something might change, but until then, it's locking in to the bottom side of the channel. So all that for Tesla on the daily and weekly charts. This is Vee Trades, and thank you for your time.